Welcome to Markets Now. I'm Michelle Brook with DuWayne Bosse with Bull Marketing, and livestock futures trading mostly higher this morning in the early go. The grain futures, we are down in corn and wheat, trying to hold on to a few gains though in the soybean market. And DuWayne, let's talk about soybeans. They've been pretty resilient here. Brazilian weather, export business, those things have been kind of at least holding that market together, haven't they?
Yeah, they really have, and that's fine. We're range bound and we're towards the higher end of the range. And just full disclosure, I'm kind of more of a bear of that market, thinking we don't have that bullish news to push through the recent highs. I think we haven't seen that farmer selling yet either, and I think that's coming soon as harvest really starts to ramp up here. Now, you do have some rain headed towards Iowa that'll probably delay a little bit, but you mentioned the Brazil drought. I'd like to point out that a little bit too. Remember, it's their dry season. It's like us having a drought during the winter. It's not a horrible thing, but, percentage-wise, of course, it's one of the worst ever. But, to push through this trading range and to really get a bullish soybean market, I think that drought in Brazil is key and would have to continue to move forward.
Yeah, right now we just keep hitting our head on the 50-day moving average in the November. We got above it, but we can't close above it.
Right. Chart-wise, it doesn't look horrible, does it? And everyone who wants to say August was the harvest low, I get why they're saying that. It looks like we're trying to make a low. But what I've done is drawn the two horizontal lines on the recent high and that what everyone's calling the harvest low from 1031 to that 955. And I think we're stuck in that range. I don't think you have that bullish story to push through unless that drought continues in Brazil. And I don't think it will, Michelle. I mean, this is fairly cyclical. They start to get wet now as they enter their wet season, and it starts from south to north. A lot of what you're seeing in the forecast moving forward. And if you have that in the next 2 weeks, along with, farmers selling, because maybe they still even have some old crop, I think it's going to be tough not to push back to maybe the lower end of the range and test that 955 harvest low.
Yeah, and I don't know, we're getting kind of some mixed yield results, aren't we?
They're a little bit all over. I mean, it's early. But in some of the early ones I saw, yields were about 25% higher than last year. But remember, I mean, our yield is expected to be higher than last year. But 25% sounds a little extreme to me. And as they're getting into some beans, it's a little mixed. Indiana is a state I'm watching closely. It seems like right around Decatur, I'm getting really good yields. But you get a little bit further northeast where the drought was, closer to Ohio, then yields are trimmed. And remember, USDA already did lower Ohio's soybean yield, so it shouldn't be a shock there. But I'm still seeing some big numbers coming out of Illinois and Iowa. And that's, I hate to always concentrate on them, but those are the two states that are really going to matter.
Absolutely. And one more point about soybean exports, and then we'll move on to corn here. 64.2 million bushels on the weekly total this morning. So good, but we are catching up, still behind though, right?
Right. I know. I was looking at it too. First off, great export sales this morning. I was surprised with it myself because I didn't see the daily sales announcements over the last week to get to a 1.7 million metric ton. Very impressed. And then I looked at the percentage we're behind and I was like, okay, we're 7% behind the USDA pace now. I'm like, that doesn't sound bad. But a month ago, we were 9% behind. So all these big sales this last month, it's still very hard to catch up to the slow pace we had. To me, the only way to even meet USDA's demand is to extend our export window, our season, with a drought in Brazil because they didn't plant early enough, or just China's demand to be better than USDA anticipates. And I'm worried that's not the case, Michelle. I actually have our export demand down around 100 million bushels, and that puts ending stocks at 655. I hate to even say that because that's not a fun thing to talk about right now, and I hope I'm wrong.
Yeah, and China came off a holiday with some really high prices on their soybeans, or a big rally there. I think there's been rumors of more China soybean business, but we just haven't seen the flash tenders reported like you just mentioned. So,
right. It was
all right. Corn market. We're down this morning. Are we just getting drugged down by the wheat market here? Or were you waiting for, more yield results from the combine, or what?
It's a really boring trade, to be honest with you, corn right now. I think they're just a follower. You're right. I think we're waiting for one more yield reports and obviously following wheat. We had a really nice rally, which helped corn rally up to their higher end of their trading range too. But, there again, yields are coming in fairly high, I think, so far. I mean, it's hard to say, you get to these years where yields are high. I always think the guys don't report the high yields, and maybe the guys with lower yields squawk a little bit louder. So I think the yields are going to be high. Did we take some of the top end off this last month during the hot, dry season or cycle we just had? Maybe, but what was that high end, Michelle? I mean, was it a 185? I don't know. But to answer your initial question, the corn market's just a little boring right now. Yeah, we're lower this morning, probably just following wheat lower, to be honest with you.
Yeah, because weekly exports were pretty good, 38.4 million bushels, and we are ahead with our totals from last year, like 28%, aren't we?
Yeah, no, if somebody asked me, which I get this question a lot, what do I store, corn or soybeans? I'd rather store corn. To me, corn has a better outlook than soybeans by quite a ways. We're barely above that 2.0 billion for an ending stock. And I just got this feeling that if USDA dips us below that sometime with better exports or better ethanol demand or a lower yield, any of those three, I think this market could actually have a post-harvest rally a little bit. But can it do it with soybeans going the opposite direction is kind of one of my questions.
Yeah, and let me correct myself. We're ahead 21% versus last year on corn exports. All right, now wheat. Wheat is lower this morning. We've got a higher dollar. We had some rains in the southern plains, so the combo is kind of pressuring futures.
Yeah, I think the biggest thing is the rains. We have been very dry in the U.S., the southern plains, and of course, going to plant winter wheat, you always need some moisture to get it germinated and going. And got some nice rains here recently there, and more forecasted. Always could use some more, but I think that turned the wheat market, or at least topped it in the short term. And it does feel like the Russia-Ukraine, even though that war is obviously ongoing, it feels like it de-escalated a little bit this week. The end of last week, you had Putin talking about nuclear war and everything else. And this week, it's just calmed down a little bit. I am a little surprised when, they sunk a Ukraine wheat ship that just left port. I thought that would have gotten the market a little bit more excited, but I think the market learned through this Russia-Ukraine war that markets just find a way. We move the grain somehow, some way, and get it out to the world.
Yeah, we've definitely gotten numb to that news. Cattle market, we're up today. We've got December above the 180 mark. How much of this is just the lower interest rates from yesterday that push in the stock market, or are cattle trading their own fundamentals?
Maybe all of it a little bit. I think a lot of it is more the perception of the U.S. economy is in good shape. And I say perception because I'm just a little confused myself. By lowering interest rates, aren't we kind of admitting that, we might have a problem? But whatever, the perception is that all is well, and we'll have more expendable money to spend on things like steaks and that. So, but also too, you had mentioned to me that, last week the cash cattle market was a little bit better than anticipated. Some are calling for a bottom in that market. I'm a little skeptical myself. I'm just a little bit worried that the packer might have more control than we think as we move into fall and winter. And they have that control because of these heavy weights. They were really smart this year. We had lower inventory, no doubt, but they put so much more weight on every critter that they kind of got through this hole in production. So I don't know. I'm a little question mark on the whole cattle market myself. The chart looks nice. We're higher this morning, but I wouldn't be buying it at these levels though.
Gotcha. And the hog market, another one that has been defying some of the fundamental odds here. The funds have really pushed that market up to the upper end of the trading range. Is it all about money flow there, or is there maybe some underlying demand that we're not noticing here? Exports have been pretty good. They were again this morning.
You're right. Yeah, they're okay. And the lower US dollar maybe does support that. But I was going to say, if there is underlying demand, I'm not seeing it. And I keep hearing that our hog supply is pretty high going into fall. So I guess I see this rally and question it maybe a little bit myself. The chart looks nice. We've got an upward trend going. But if I'm a hog producer, I'm looking at hedging and protecting these prices because I don't think we have to hold here.
Yeah, and usually we get into the bigger numbers here in the October timeframe. It looks like that's going to be the case again here from a seasonal standpoint.
Yeah, that's your seasonal tendency. Last year we were in the low 70 to 68, 69. So I wouldn't be shocked if we go back there again.
All right. Thanks so much, DuWayne Bosse with Bolt Marketing. That is Markets Now.